BTIG's Jonathan Krinsky, he's going to break down these crucial moments, ones in which are going to be record-setting. They sure look like that, Jonathan. We're on pace now for record setters for all three of the majors. S&P 500 above 6,500 for the very first time ever. Technically speaking, this market looks pretty darn good, doesn't it?
Yeah, so we came into August with some pretty decent divergences between breadth in the indices, and divergences always resolve one of two ways, right? They either you have the indices catch down to the weak breadth, or you have breadth catch up to the indices. And we saw the latter on Friday after Jackson Hole. As of Friday's close, you had the best reading of Russell 3000 stocks, which is essentially the entire stock market. You had the best reading there of the year, right? So breadth certainly caught up to the indexes. And so what we've been saying is, that's kind of a level to trade against where we kind of broke out from at Jackson Hole, which is around 6,400 on the S&P 500 to keep it simple. So breadth has been improving. As long as the S&P is above there, I think the bulls maintain the upper hand. I don't know if there's a ton of upside on the index level, but I think that's when you want to start looking below the surface at some sector rotations.
All right, good tease, because we'll come back to you for a play that you think could be on the verge of a breakout. Back to Jonathan Krinsky now. All right, so this broadening story. Note today, poised for a breakout. Energy has been one of the worst performers.
Yeah, so if you look at some of the risk ratios like cyclicals versus defensives, those ratios have broken out to year-to-date highs. That's a good sign for risk at the moment. So I think you want to avoid some of the defensives, the low volatility names, but what you want to be looking for is some of the cyclical areas, and energy really fits that bill. It is one of the worst performing sectors on the year. If we're talking about the XLE ETF, there's an unfilled gap from April around $93. So we think that gets filled. I think it's the only sector that hasn't filled its April Liberation Day gap. So that would be kind of a near-term target. But I think when you're thinking about the commodity itself, crude oil, large speculators have the smallest net long position relative to open interest in about 15 years. So I think, sentiment is pretty skewed, lopsided here. And, we're just starting to see breakouts in a lot of the energy charts. So we look at the XLE, the XOP, those sort of names here.
All right, good stuff. Jonathan, it's been good to have you.